what Bill Gross is saying needs to happen is you need to get more than $200 to pass go for the economy to expand, and that low interest rate policies are having the reverse effect. Instead of increasing the money supply, they're leading people to put money in their mattresses and just save. So it's hurting pensions, it's hurting insurance companies, it's hurting banks. Credit isn't growing, and for the economy to grow, he says, you need private credit to grow.
So what is he saying? Helicopter money?
He says helicopter money, and he's also been saying for months, if not years, that the Fed needs to get off zero, raise interest rates, and give an incentive to people to save, or do more than just save, to put their money to work, is really what he's saying. Get more than $200 when you pass go.
Yelena, so after, let's turn to the May jobs report as well, because we had this decision by the Fed coming after that. But we had today more positive data from the ISM non-manufacturing composite. So how will this factor into their decision, or what are we expecting to see in the minutes?
In the minutes, I think, first of all, looking at the data have been mixed, as you just mentioned. We had very encouraging signs from the surveys, but on the other hand, growth in jobs has decelerated. Maybe it's just a lagged impact from slowdown in growth in the first quarter. I think growth will rebound in the second quarter, and we are seeing signs of that. Both survey and hard data telling us that growth is rebounding, but it's not going to be something super great growth actually, because growth has been limited by the lack of credit growth, and personal consumption growth has been limited by the lack of credit growth, as Mr. Gross mentioned.
So but bad numbers could be good news for Wall Street, right? If the Fed decides to take that data and make it rain, right, John? I mean, that's what Gross is pushing for, and they're certainly not gonna do that if they get good or even just decent data.
I don't know what the Fed's going to do, but yeah, there needs to get to be more money in the system, according to Bill Gross. And that money's got to come from both. It could come from fiscal stimulus, like folks in Washington saying, let's do infrastructure investment or just shower people with money, or it could come from the private sector, which hasn't happened. Banks haven't been lending more money, and people haven't been borrowing because they're concerned about taking on more risk. They've been deleveraging, and the deleveraging kind of continues.
Can a lot of times people say something that they think the Fed should do and something that they think the Fed's going to do. So we know what Bill Gross wants the Fed to do. Does he think they're listening to him and they're going to pull the trigger?
A few years ago, Bill Gross was called by the Fed increasingly addled. He called the Fed increasingly addled. So I don't know how much attention they're paying to each other. I mean, he only manages $1.4 billion, which is, chicken feed. Bond investors, the bond yield forecasts are for, shrinking yields, and the Bloomberg WIRP is for no Fed hike for the next couple of years. So it doesn't look like there's going to be any rate increase coming from Janet Yellen.
John, and tell me about the deglobalization concerns that Gross talked about.
Yeah, well, the Brexit vote is an example of that, basically where people are saying we don't want to have our local economy dictated by some internationalist group, and we want to limit immigration. That's something that's happened in Britain, obviously. It's going on in France. And there's a lot of aspects of Donald Trump's campaign that appeal to similar instincts or, feelings among people, concerns that they're being left behind by globalization.